Hello, Level Up community. Welcome to Wrap Up with Rhea. So today we'll be discussing about the AMT paid and AMT credit, which were the things we learned from our first learning session. So AMT, alternative minimum tax, is essentially a hidden tax layer that runs in the background of your tax return. It adds extra income to your taxable amount and limits the deductions you can claim, forcing you to pay the higher of your regular tax or AMT. However, there's a good news. For those who paid AMT due to exercising incentive stock options or the ISOs, you may be eligible for an AMT credit to recoup some of this tax. So this credit might take a few years to fully realize, but it can provide significant relief. So here's how it works. When you sell your ISOs, the AMT basis adjustment can substantially lower your AMT taxable income, potentially allowing for a larger credit in that year. Remember, if you're still under AMT in future years, you won't qualify for the credit in those years. But the good news is, this credit carries over indefinitely. So you'll get it back gradually, even if it takes time. So we have a sample here based on our session. On the left side, you can see the regular tax calculation, comparing it to AMT calculation on the right side. So we need to understand so that we can explain it to our clients. So if we go first to the regular tax calculation, on the left side, we have a taxable income of a 500,000. This is the income before deduction. And then we have deductions of 30,000, which includes either standard or itemized deductions, giving us a taxable income after deductions of 470,000. So this income will be taxed according to the applicable tax bracket under the regular tax system. So if we compare it, on the right side, we have the AMT calculation. So in the AMT calculation, we have AMT taxable income base, the same with the regular taxable income of 500,000. And then we have an ISO exercise delta, which is our first difference of 150,000. So this is the difference between the exercise price and the market value of the stock. So this is added back to the AMT calculation. The second difference is the limited deduction. So in the AMT calculation, we have a disallowed deduction of 20,000. This deduction under the regular tax system is normal, but this is not applicable to AMT. So this gives us an AMT taxable income of 630,000, which is applied to a flat tax rate, which can be a difference between the progressive rates that we are using in the regular tax system. So here, we need to understand and we need to remember that our clients are required to pay the higher of the two taxes, either the tax calculated under the regular tax system or the tax calculated under AMT. This means that if the AMT results in a higher tax liability, you will pay that amount instead of the regular tax amount. So the AMT is really designed to ensure that our clients with high incomes, especially those who benefit from certain deductions or exemptions, pay at least a minimum amount of tax. So when exercising ISOs, the difference between the market value and the exercise price is added to the AMT calculation, potentially increasing the tax liability. In addition to that, this is how our clients can get the AMT credit back. So first, they're able to take credit the following tax year. Second, credit is reported on Form 8801. And the third is they need to know the calculation on how much credit is allowed to be taken in the given year. And then the last one, the year ISOs are sold with AMT basis adjustment helps bring down AMT taxable income, which may allow for more AMT credit. So again, we need to remember, while AMT can be a burden now, the credit offers a pathway to recover over time. So I think that's it for our Level Up wrap up with Rhea today. See you.